If you keep getting stopped out and then you watch price run directly to your take profit, it's because you're not implementing this one simple confluence. So if you give me the next 60 seconds of your time, I'm going to give you guys the solution so that you never have to experience this problem again. The simple confluence you need to understand to make sure you don't get stopped out like that is the open high low close. What the open high low close allows you to do is to identify protected stop losses when we're forming the wicks of these high time frame candles. So when we have a bullish bias, we can wait for a new high time frame candle to open and manipulate lower into a PD array inside of a time-based discount to identify the manipulation, giving us a protected low. And in a bullish example, you can wait for the new hourly candle to open and manipulate into a PD array inside of a time-based premium so that we can identify a protected high. Now, in order to determine if we want to have a bullish high time frame candle or a bearish high time frame candle, we need to have a high time frame bias. And you can find your bias using a key level paired with an SMT. Now, all these key levels are simply high time frame fair value gaps that we tap into or high time frame highs and lows that we sweep out and use as liquidity. And you also want to make sure that there's resting session liquidity on the opposite side of this manipulation that we can use for our draws on liquidity or our take profit levels. So now that we have our bias and our draws on liquidity in place, we can simply wait for our next high time frame candle to open and manipulate higher, putting in the top of the wick before distributing lower and closing, since we think this next high time frame candle is going to be bearish. And as you can see, that's exactly what happens. The hourly candle opens and we manipulate into this 15-minute fair value gap that's resting above our hourly open. And the final confirmation we need to see to make sure that this should be the high of the hourly candle and a protected high is a change in state of delivery, as you see right here. And as you can see, if you were to take this entry position at the change in state of delivery and targeted our previous session lows, our take profit would have been hit for about a 1.5 risk to reward. If you guys want to know more about this 3-step distribution model that's allowed me to get over 7 figures in funded capital, I made a checklist that you guys can follow along with while you're trading. And to receive this checklist, all you have to do is follow me and comment the word checklist, and I'll send you the PDF.